Hey, this is Darren from Property Prosperity. Today I thought I'd have a little bit of a chat about tax, and probably one of the taxes that probably people don't even realise is a tax on property is GST. So if you're from Australia, you're going to know what I'm talking about as far as what GST is, but basically GST is a goods and services tax, so it's tax on trading of products or services, and it's a tax imposed by the government. In Australia it's 10% of whatever the value of the property is. And then, so what happens, the person selling the product then collects that 10%. So example wise, if I'm selling you something worth $1,100, $1,100, then I have to collect 10% of that, and then I have to give that back to the government, and the government use then to pay for whatever the government pays for, essentially. So thanks for the like, and yeah, if you like what I have to say, then click on the like button. I really appreciate that, and if you don't, still click on the like button because it's really cool. So yeah, basically, so that's what goods and services tax are. So if you imagine you're buying a pair of shoes and you buy them for $11, then $1 goes to the government and $10 goes to the owner, basically. So in this situation, how they work out who has to pay GST and who doesn't have to pay GST. So basically, what they're going to do is they're going to look at the sometimes they look at the value of the product. So goods from overseas have a limit on how much they're going to charge you for, whether they get charged GST or not. Goods within Australia, you get basically charged GST on most things except for a few things which are excluded. So that comes down to the thing, okay, well, I understand that businesses have to pay GST when they're, collect GST. Hey, Glenn, thanks for joining. Have to pay GST when they're selling a product, but how does that apply to properties? So with properties, really, they do have exemptions for properties because the reason is that what GST is charged for is goods and services. So really, if you're running a business, anything you do where you're selling a product for a business, whether it happens to be a service where I'm providing advice to you and I charge you a charge for that, then I'll have to pay GST back to the government. Or likewise, a product that I'm selling. So how does property fit into that? Because really, if I buy a property to live in, I'm not really running a business or anything. So that's essentially the same way the government works it out. Are you running a business or are you not running a business? If you're running a business, then you have to pay GST. If you're not running a business, then you won't have to pay GST. So in the situation with property, if you're going to buy a house to live in, then it's pretty clear you're living in the property, you're not doing it to make money. It's just incidental. You might actually have to sell that property, and you might sell it for more than what you paid for it, but it's your intention of buying the property which will determine whether you're doing it to make money or whether you're doing it whether you're not doing it to make money. So the next thing is, okay, so we're buying a property to live in, we can see why we wouldn't have to pay GST on that. With a property as a rental property, the government's actually, they won't charge you GST on a rental property. I suppose an incentive to get people to go out there and buy properties to rent out, because really as far as the government's concerned, they want investors to go out and buy rental properties, because what that does is keeps the prices of properties down, gives a supply of houses out there, because obviously if there's less properties on the market, then it's going to increase the value of properties overall. So they want a good supply of housing. Otherwise you end up with the government having to supply a whole pile of houses to people, because otherwise people can't afford to live in houses, basically. So then we got to think about, okay, well, if they're not going to charge me GST on my investment property, then when are they going to charge me GST? And so this is where it comes in as far as a developer goes. So the thing to understand, if you're a developer, your intention is to buy a property, develop it, and then sell it. And so particularly if you're essentially running a business, and if you do it multiple times, you're running a business of developing properties. So that's when the taxman's going to say, okay, well, actually, this is a business, just like selling shoes or selling any service or goods. And so it just happens it's worth a lot more money. So what they do in the world of for property developers, they look at your intention. So let's say I've got a little old lady that I'm helping do a subdivision. So she's bought a property back in 1975 or something, and then she's hanging on to it, and it just happens that she could sell the property as is, or she could develop the property and then sell it as two subdivided blocks. So in that example, her intention's not to become a property developer. Her intention's not to run a business of buying and selling properties. Her intention is just to sell the property. It just happens the best way to realize that value, she could either sell the property as is, or she could subdivide it and sell two blocks of land off, or build two houses on it and sell it off. And so I suppose it's good to understand is the intention is determine whether you're running a business or not. So the little old lady, her intention is not to run a business, her intention is just to sell the property. And it just happens the best way to realize that value is to develop the property. The other side of the coin is, let's say I bought a property with the sole intention of developing it and then selling it. It's going to be pretty easy and pretty clear cut to see that my intention was to buy the property, develop it, because we'll see we bought it, we haven't really rented it out, we've held on to it for quite a short period of time, we've developed it over that period of time, and then we sold it off straight away. it's going to be a lot harder for you to argue your intention then was to hang on to the property if you just bought it and sold it straight away. But however, if there's a situation where you have bought it and you've rented it out for a period of time and then you've decided to sell it down the track, then you could argue, my intention wasn't to develop it. It just happens to happen that I bought it, I rented it out for a period of time, and then I've changed my mind. And so in that instance where our intention wasn't to develop the property, our intention wasn't to run a business of being a property developer, our intention was just to buy and hold, and it just happened that our situation changed and we had to sell the property. So in that instance, we won't have to pay a GST, even though it is on a development. The problem you get with that, you can sort of do it maybe once or twice, maybe even, but once you start to do it multiple times in the same name or in the same entity, if you hold it in a company or in a trust or whatever, the tax man's going to be pretty onto you pretty quickly. So if you do it once and buy it, hang on to it for a year or two, and then you subdivide it and then sell it, then you could probably legitimately argue, well, I'm not doing it with the intention to make money. But then if you go and do it again and buy it and hang on to it for another year and then develop it and sell it, then you're going to have the situation where the tax man's going to say, hang on, that doesn't look like you're doing it to buy and hold. It looks like you're doing it to make money out of being a property developer, basically. So in that instance, you are going to get yourself in a little bit of trouble, and the tax man's going to come back and say, hey, well, you're going to have to pay GST on that because you're running a business. So, hey, thanks for the likes. I appreciate that. Hopefully it made sense, everybody. So, and likewise, so what does that mean? Basically, if we're going to be a property developer and we're going to buy and develop a property and then sell it, how do we pay GST? Because, imagine if we're going to pay GST. Let's say we sell a property for $500,000. The GST on that's going to be, if it's 10%, then in theory, that's going to be $50,000 worth of GST we pay. Well, this is where it's slightly different with property than when it is with, say, selling a pair of shoes or whatever. They actually have something called the margin scheme, and it's actually a choice the way you want to be charged GST, and most developers go for this sort of method because generally it's a bit cheaper. So if we have the situation we buy a property for $400,000 and then we subdivide the property and then we sell it off at 2 blocks of land worth $250,000 each, then essentially the value of those 2 blocks of land will be worth $500,000. So we bought it for $400,000. We've subdivided it, we've realised the value being $500,000. So what the margin scheme means is they're going to charge you GST based on the increase in value you've created by your development. So in this situation, the original value was $400,000 we bought it for. The new value is $500,000 we've sold it for. So we're going to be paying GST on the increase in value, which is the $100,000. So you'll pay 10% of the $100,000. So you can see in that situation, if we were to have the situation where we paid 10% of the total value, that'd be 10% of $500,000, that'd be $50,000. In the situation where we're paying 10% of $100,000, that's only, who knows what that is? It's not quite $10,000, just a bit under that, $9,000, just over $9,000. So you can see it's a lot better to go through the margin scheme, and you're going to find that's the situation most times when you're a property developer. Quite often you're going to go through what's called the margin scheme. The thing to understand when you're going through the margin scheme, it's not a situation where you're like a business where you can claim GST when you're purchasing. Let's example-wise, if I purchase something and I pay GST, I'll be able to claim the GST along the way and then reimburse myself with the GST on the other side when I actually pay the GST on the other side. So it sort of offsets itself. In the situation where you're paying the margin scheme, the price you paid for the property, you're not being able to claim back a portion of the margin, the GST on that, because you're not paying any GST on it. And so that's why they give you essentially a bit of a discount, because you're not paying GST when you're purchasing property. You're only paying GST when you sell the property. So they can't hit you for the full 10% because you don't get to reimburse for the price you paid for the property. So that's why it seems like they're giving you a bit of a discount. In reality, it's not that much of a discount. So yeah, that's basically what the margin scheme is. You're paying GST on the gain in the value of the property. So in a situation where you happen to buy a property and develop a property, but you held it over a period of time, what the taxman might actually say, let's say you buy it, hang on to it for a year or two, but then the taxman says actually what you've done there is we've had the intention to develop the property. They may actually even look back and say, okay, at what point in time did your intention change, and at what point in time should we apply the margin scheme? So at that point in time, they may revalue the property at that point in time and look at the difference between the point in time that your intention changed and the point in time you actually sold the property. And so in theory, I bought it at $400,000, the value went up to $450,000, my intention changed at that point in time, and that's when I decided to develop the property, and it went from $450,000 up to $500,000, so we get charged GST on the increase in value from the $450,000 to $500,000, which means it'll take GST on the $50,000, which means about $5,000 worth of GST. So you can see it does get a little bit complicated. It's not that stressful, to be honest. Just get some advice from an accountant. That's why I'd probably advise you, if you are thinking about doing a development, you get some advice from an accountant straight away, even before you've bought the development, and just have an understanding, is there anything I can do to try and minimize the potential that I have to pay as GST? And they might say to you, well, if you hang on to it for a certain period of time, or if you do this or you do that. I suppose the thing to understand, it doesn't really matter about the amount of time you're hanging on to the property. It really, all it matters is about the intention of why you're buying the property. So just bear that in mind. So you can't really just say, hey, I've held on to it for a year or 2 years or 6 months or a month or whatever it happens to be. It's all about your intention of why you're buying. If you have the intention to make money, your intention then is to run a business, essentially. Anything you do to make money is essentially to run a business, and essentially the tax man will say, okay, well, you're running a business of buying and selling properties, you have to pay GST, most likely people are going to get taxed on the margin scheme, and then you pay 10% of the increase in value. So hopefully that's made sense to everybody. Hopefully I haven't confused you too much. I've tried to repeat myself a few different times, so hopefully you've got it the third or fourth time. So and yeah, if you like what I had to say, click on the like button. If you haven't liked what I had to say, then still click on the like button, because I'd really appreciate it. And if you have something you'd like me to talk about in the future, I'd more than happy to answer any questions you may have. And if you have liked what I had to say and you want to give me some feedback, I'd really appreciate it. If you if you've had this experience in the past where you've been a little bit confused and haven't been sure about something as far as tax goes, then feel free to put a question in there and I'll try and answer it as best as I can. So thanks guys for joining me. I hope it's been valuable, and I look forward to talking to you again soon. Bye for now.